first and foremost, was this at all a market-moving budget?
Not necessarily. I think the bonds seem to rally. I think the market was a bit concerned on the bond side that we may see changes to the inflation target. But on the equity market as a whole, I don't necessarily think it was a major market-moving event.
Where there was some news to hit was on the mining front. I mean, we saw, mining royalties important for local equities. It was only suspended last year on account of the recession. Any surprises on that being implemented now as of the 1st of March?
No, I think there may have been one or two participants who maybe thought it would be suspended for another year. But again, not a major surprise. I think the mining companies were fortunate to get a reprieve last year. But yeah, no major surprises on the royalty front.
Now that it is coming to the fore, I mean, to what extent do you see it eroding South Africa's competitiveness in global mining?
It really all depends on what sort of stance other countries take. A couple of weeks ago, Australia proposed a far more radical change to their tax on mining companies, moving from a state to federal taxes. And if that is implemented, then their sort of tax would actually deteriorate relative to South Africa.
Well, certainly for now, AngloGold Ashanti posting quite solid results this morning on the back of a higher gold price. What did you make of those numbers released this morning?
The numbers sort of beat the headline consensus, mainly as a result of, as you said, a higher gold price. They also got a foreign exchange gain on a loan that they repaid. If you strip that out, though, sort of very much in line with where they were in the third quarter and where the market was looking. But generally a good set of results. The guidance for next year in terms of ounces and cash costs, again, sort of reasonably good and in line with what the market was looking for.
Well, that on the mining front, just some of the news out there. On the finance front, I mean, we had the minister announcing plans to implement financial regulatory reforms that was in line with G20 recommendations. Banks will be liable to acquire direct and indirect exposure up to 25% of total liabilities. What's your view on that move? How exactly are you reading it?
Yeah, we're going to have to do a bit more work on exactly how that is going to be implemented. I think ultimately that will still be regulated by Errol Kruger, the registrar of banks. But I guess we're still waiting for a bit more clarity in terms of exactly how banks will be able to use these facilities, presumably to sort of finance their client trade flows overseas on a more level footing with some of the other global banks. We
had some ahead of the budget getting a bit nervous about possible regulations, where suggestions were made that South Africa may well follow the route of Brazil in imposing a tax on short-term capital inflows in order to prevent any dramatic swings on the currency. We've seen that has not come to the fore. We've certainly seen the minister reiterate that they're not going to be stepping in and affecting rand and currency movement right now. Surely that move in the first place wasn't viable because we're so dependent on those capital inflows.
I agree with you. I think South Africa runs a big current account deficit, so we need those trade flows. So I think his current recommendation of leaning against very strong capital inflows with reserve accumulation is a much better way to go, rather than trying to discourage offshore investment with any kind of punitive tax.
Just taking a look at the rand picture, I mean, we've seen concern and talk about the rand being overvalued. What's your view on the rand and its future direction?
We think the rand is sort of fairly valued at these levels. There's obviously quite a lot of sort of noise coming out of the US and the Eurozone at the moment. But we think the rand is sort of fairly valued at these current levels.